In this video, I want to talk to you guys about what's pushing down SoFi stock right now, how low the dip could possibly go, and then we're also going to talk about how investors like ourselves can possibly take advantage of these low prices. So if you guys like this sort of content, then make sure you hit the like button down below. It's by far the best way to let me know that you guys love the SoFi coverage. So for any of you guys that don't know, back on November 11th, this stock actually ran up to $24 a share after some great Q3 earnings. But now, just a couple weeks later, not even a full month later, okay, this stock has dropped over 30% on what seems to be not even SoFi news. Like seriously, this drop is actually not even SoFi related. You're seeing this across the board in fintech stocks. Whether it's Square, PayPal, Robinhood, SoFi, all of them are crashing. But this could actually be a really good thing, right? I mean, the lower the price of a stock, the less risky it actually is because the risk has already been taken out. We've already seen a 30% drop, so this could mean a great buying opportunity. Think about the greatest investor of all time, right? Warren Buffett. Buy low, sell high. That was his big quote. Now, that's a dumbed down version of how he actually picks stocks, but it's a great thing to know whenever you're buying a company that's already down 30% from just a month ago on news that's not even related to its own company. So let me tell you what actually is spooking a lot of SoFi investors, and that actually has to do with the Federal Reserve Chairman, Jerome Powell. And that's that Jerome Powell came out just a couple days ago saying that he's reversed everything that he's been saying for the past year. And that's that inflation was transitory, right? And that it's only going to be for a short period of time. Just last week, Jay Powell actually came out and I quote, "Probably a good time to retire that word." And then he also said that if interest rate hikes don't come sooner than expected, that we're going to see, persistently high inflation rates in the next coming years. People are actually saying that this could happen as early as Q1 of 2022, so it's spooking SoFi. Now, for all the people that don't understand how this could actually affect SoFi, let me explain. Let's do a little easy math on their most important products, which is actually their lending category. Yes, I mean, their financial products are growing like crazy, but their lending products actually make up for 77% of their revenue overall. America's base interest rate, which is set by the Federal Reserve, is currently at 0.25%. But then let's say that SoFi wants to make 5% on their money. So what they would do is actually charge the consumer about 5.25% because they're going to be borrowing that money. Now, it's not actually at that exact rate because they have sweep partners and all this, but let's just keep it simple. But now let's say that the Federal Reserve actually wants to hike interest rates and raise it up to, let's say, 1%. SoFi, still not being greedy, only wants their 5%. Okay, so now whenever they go to the consumer, they're going to charge 6% because they borrow for 1% and then they charge 5%. This doesn't directly affect SoFi because they're still going to be getting their 5%. But what it does do is affect the consumers, and then there's going to be a select few amount of actual consumers that could afford at 5.25% that now can't at 6%. I mean, the whole idea of why they're raising interest rates in the first place is not just to be more greedy and take a higher amount. What it is supposed to do is actually slow down the amount of borrowing so then, the velocity of money slows down and then they can actually get inflation under control. So it is definitely scary to know that there's going to be a percentage of users that could have SoFi's product before that won't have it into the future. Now, these rate hikes are going to negatively affect SoFi. That's just a guarantee. But that's not even the question that you should be asking yourself, okay? The question that you should be asking yourself is right now, after a 33% drop, will SoFi's, lending products and their overall business be affected by 33% difference from where they were November 11th? I mean, if you want my opinion, absolutely not. It's not even going to be close to affecting it at a 33% rate. It might not even hit double digits. But what I haven't even mentioned to you yet is the fact that SoFi is growing on so many other fronts. Whenever you're talking about the question of, is this going to affect their, existing members by 33%? And I say no, that doesn't even include the amount of member growth or the amount of other options that they have or their financial services that are growing at 180% year over year. And I mean, there's just other things happening in this business that are also going to counteract this 33% drop on the news of this rate hike. For one, it's actually going to be, the partnership with Pagaya. See, if you don't know, and to set it up really, really well, out of all the loan applications that we get, because we only take the best of the best clients, we can only accept around 30% of the applications that we get every single day. Now, before this Pagaya partnership, which just happened in October and November, not even in our last Q3 results, which were amazing, that means that around 70% of all the actual loaning applicants that come to our business, we have to turn away without actually making any revenue from them at all. Zero. But that's actually changed now with the partnership with Pagaya because now we're actually going to be able to take those applicants and sell them to subprime lenders. We're not actually going to make the risky bets on whether or not they're going to pay us back. What we are going to do is just sell their information, have someone else call them, and them to be able to stay on our platform. This is going to give us lead revenue. Obviously, it's not going to be as much as an actual lending product, but it's still going to be a lot, especially especially whenever you're talking about 70% of the overall, applicants that we just completely turned away. These sorts of partnerships and ideas that Anthony Noto is putting together is what's making SoFi grow faster than the overall financial services industry. Now, I'm not even saying that this is going to make us enough revenue to actually make up for the losses that the interest rate hikes are going to hurt us for. But I don't even think that the interest rates are going to hurt us 33% with or without the partnership. So if you just add it on, that's even better of a deal, let alone, all the product increases, all the membership increases, all the other things that Anthony Noto is working on in this business. Now, this is the thing that I love most about the stock market. Whether you're a retail investor or institutional investor, you have the best technology ever to buy and sell your stocks. There's always overreactions in the stock market. Whether it's good news or bad, people overbuy or oversell a stock, and it leaves for amazing opportunities whenever you, like going back to Warren Buffett, buy low, sell high. But also, like I said at the beginning of the video, I do think that this dip could continue. We could actually see it as low as around $14 a share. I mean, that's the last big support that we saw from the company before, but that doesn't mean that I'm not buying today, right? You can actually dollar cost average down rather than, not buying all at once and actually end up missing your opportunity. So I'm buying now, and then on the way down, I'll continue to buy if it does happen, but it could also turn around at any time. But I mean, that's just what I'm doing with my own portfolio, right? You guys can do whatever you want with yours. This is not a recommendation. But if you want to see more about what I'm actually doing, make sure you guys hit the like and subscribe down below if you want to see more financial content just like this. But until next time, guys, really do appreciate you watching. I'll have to see you guys next time. Bye for now.